Market structure. Market structure is a very important factor you have to consider when trading supply and demand. Market structure gives us the overall market bias to give us a sense of direction where price is going to. So it's very simple. The way you know it before, higher high, higher low, higher high, higher low, higher high. After the break of this higher high, of this higher low, the other people you call it chalk, change of character. What does change of character mean? It means that the other flow coming up from here has changed. So we expect another other flow, the opposite. So now sellers came to the market, this and this. Okay, now, so how do I look at market structure? I look at market structure based on supply and demand, just like the way we discussed in the previous video regarding the foundation of supply and demand ranges. So after the break of structure of every market structure, so after a break of structure, we know that this holding demand is what caused this break of structure. Are you getting me? So it means that the true market structure is this holding demand. So as long as price as long as price remains within that range, as long as price remains within this range, this range of price, it means that we are bullish until we get a break of the true market structure. Until we get a break of this market structure, that is when we that's when we say we have had a break of structure following the way I look at the market. This is when I say I have a break of structure. Why? Because the other flow of supply and demand has shifted. Are you getting me? So in a case whereby this price did not break this place, we are still bullish. In a case whereby after the break of structure over here, price came to this demand, we are still bullish. So in this case, I'll be looking for buys. Are you getting me? Hoping that price will come over here and break another structure. That's just how it is. Are you getting me? But now that price has failed to create a new higher high, price came down and broke our holding demand, which is our control demand. Huh? This is when we say we have had what? A break of structure. Are you getting me? We have had a break of structure. Are you getting me? So after this break of structure, what do I look for now? I now look for, market has broken the real structure. So now what happened? How did it do it? Where was the range? Where was the supply market used to break this holding demand over here? Are you getting me? So we can see that we have a supply here from this structural perspective, this order flow perspective. Are you getting me? Also, you agree with me that this was a reaction. Then you agree with me that we will surely have a range over here that might cause the break of structure. But you can see that price reacted. Price failed to come here, but it reacted here. Are you getting me? So this is a new concept I want to teach you. It's called exchange points. Some people will call it flip, supply and demand flip, but I see it as exchange point. Are you getting me? So it happens when price breaks a structural level or breaks a range or breaks a demand or supply level impulsively, so leaving um improper price action, which is like what people call imbalance. Are you getting me? So it's when price breaks a zone impulsively, impulsively. um, so so when price breaks a structural point of demand impulsively, it comes back to retest that exchange point. So this is the exchange point. You agree with me that this is our holding control demand, our holding demand, and also you will also agree with me that there will be printed a range over here that cost price, that caused the break of structure, like what we learned from the other video. Are you getting me? So you agree with me, there will be a range there. Then, but why the price not come here to react or here to react is because of this place is a high probability point of interest. When we have imbalance over here or an impulsive moves, very sharp, very quick move. Are you getting me? Price will always come to the exchange point. So in this case, you mark here. When price gets here, you monitor it. If it does not happen here, it will come here. If it does not happen, it will come here to make a new higher high. Are you getting me? So until we have a break of structure over here before we can say bullishness has continued. Are you getting me? So it means that it means that markets can easily do this. Are you getting me? So until we have this break of structure before we can say the bullishness has continued. I getting me? So that's why I said market structure is very, very important. This is our whole leg. This is the real structure. This is the real market structure. The real market structure. So until it is broken, before we can say the bullishness has continued. The same concept. Find your supply zones. Then you wait for another entry. So that's how I write it. That's how we write it until probably after this break of structure, until we see our our main supply zone broken. So yeah, here will be our next important zone until we see it break. Until it is broken, before we say we have now a real break of structure. Are you getting me? So now we'll look for our ranges somewhere around wherever, then we'll take the market down. So that's how it is. Before we go to the live charts, let me quickly explain this concept again. So after a break of structure, what do you look for? This is how your mindset ought to be every time. This is how your mindset ought to be all the time. After a break of structure of a control demand, after a break of structure of a control demand, what do you wait for? First of all, you mark your control supply that caused the bearishness. So this place right here, this is the real structural leg. Are you getting me? That's the real structural leg. Then what do we now wait for? Also, our control supply will be somewhere around, because you know that a price will do what? Price will create a range that will cost the BOS. So what do we wait for? Wait for price to get to well, let me mark the control supply again. So this will be our range that costs the BOS. So wait for price to get the to our point of interest. then breaks, then that's where we'll find our entry. Are you getting me? That is where we'll find our entry. So after this break of structure again, what do you wait for? The same thing. This is our control demand. Are you getting me? Then this is our real structural leg. This is our new structural leg. So, but if price does this, price, do you imagine if price does this? This is why you need a good understanding of market structure. So let me try to explain what happened here. So after Pride was able to respect this the range that broke structure, yeah, it did it, then it broke another structure. It means this is our new leg. Are you getting me? So, but after the break of structure of this leg, we are no longer bearish. See me? We have now turned our mindset to bullish because now we are it has broken structure above. So now what do you now look for? You look for the what? For the demand for our structural leg. Here will be the control demand. Then also you look for somewhere around here. You will see the range that broke structure somewhere around there. Are you getting me? Then also we know that um we know that despite the fact that price respected this range, we know that we have another important point of interest here. We have another unmitigated supply over here. So it means that you here is also important. This point of interest is also important. Are you getting me? So this is where we become flexible in our swing trade and in our intraday trade. Like this, like the scenario here, when we place a trade here, the scenario here, this is a swing trade because if you take a trade here, your point of your TP will be this because we know because we are expecting a lower low. So that's a swing trade. But in this case, if you take a trade from here, you should not expect price to break this low. First of all, because we have to be realistic, especially when you are back testing, you have to be realistic. We should not expect price to break this low because there is a break of structure of market structure over here. So why you now expect price to break this low? Because it does not make sense because right now there's a trend shift because what's supposed to happen is this a higher high. Are you getting me? So now because of this is still an unmitigated supply zone, so you can observe price here, take an entry, then put your TP here, put your TP here, or you can partial out if you feel that price will break. You can put your TP here. Are you getting me? So if you put your TP here, what do you expect? You expect price to go up. Are you getting me? Then also this zone. Oh, what happened? What happened? Okay. So this zone, my I don't think I should go into this because if you are I don't think I should go into this because yeah also you can also take a trade, yeah, because you know why? Because normally we expect price to bounce from this zone also. So it means that if a range over here was able to what am I drawing? It means that even a range if a range over here was able to break this range, so this range was able to break this range, that makes this range a good point of interest. So are you getting me? But never mind, maybe once we get better we'll start discussing about paying more attention to little details. Are you getting me? But now are you getting me? So let's go back to the proper structure. So price was broke this structure, tested our control supply, broke another structure, broke our main market structure. So now our mindset has changed bullish. So here was still unmitigated. So we were, if you take a trade here, your TP will be here. So that will be an intraday trade. Take your TP here, monitor trades here for a buy, but now the buy failed and broke structure. So now this break of structure is a real break of structure. This is a real break of market structure. I getting me. So now, what do you now wait for now? You let me delete all this stuff. So yeah. So where's our new leg now? This is our new leg, our new control demand. Are you getting me? This also, depending on how what market is saying, um, surely, surely there will be maybe a third range over here. Are you getting me? So what do we now expect price to do now? We expect price to come in either here, come either here. Are you getting me? To continue bearish. So I get him. So now, if you take a trade here, this will be what? A swing trade. Because why? Your TP will be here. There will be a swing trade. And let me make this last point before we go to the live chat. What's it mean? Oh my God. Let me make this last point before we go to the live chat. This is not a break of structure. Are you getting me? This is not a break of structure. Are you getting? Because this is the real leg. This is the real leg. So if price breaks this place, it does not tell, it's just a retracement. Are you getting me? So some persons will be looking for buys here. Are you getting me? So these 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 are the market smart money traps. These are the smart money traps. So you see smart money traders break of structure. They will even say this is a sweep of liquidity. Wow, this is a sweep of liquidity, break of structure. Many of them will just put their entries here. Many of them will put their entry here. They will put why is this thing doing like this? Whatever. But you see that they will put their entries here and take. But see, price just invalidates it. Are you getting me? So this high is not real. This high is fake. But you can also monitor it, but it's fake because it is not the real, it's not the real structure. The real leg is, so you can just see this whole move. This whole move has one leg, has one leg. Are you getting me? But like I said, you can still monitor price here because price can also react from here. You can also monitor price. Then but if price break, this is not a break of structure. So that's the way I look at market structure. That's where I look at market structure. So for a recap, I think I will have to make another video for the live chat so that this video won't be too long. So for a recap, so after the break of structure over here, what do we wait for? We first of all know our control demand, mark our control supply, and also the extreme, which is the one that took liquidity, whatever name you want to call it. So wait for price to react from any one of those two. So you can see that price reacted from the one that broke structure. They gave us another BOS. This means that this right here is our new structural leg. Are you getting me? After this BOS. So what did price do? Price broke our new structural leg. What it means that there's a switch in trend, or there's a shift in trend. So but we know that this control demand over here is still left unmitigated. Are you getting me? So you can find a trade here in the lower time frame, but where would your target be? We have to be realistic. We cannot be sure that this high this low can be broken. Are you getting me? So now where will your target be if you take a trade there? We have to be realistic. So your target, just like the way you marked this place after the break of structure, this will be our control demand. This will be, so somewhere around here. Wait, let me delete this line. Let me delete this line. Oops. Yeah. So somewhere around here would be our control supply, which is the one that broke structure. Yeah, somewhere around there will be the control supply. Let me write, here will be BOS. So somewhere around there will be the control supply. So it means that here, if you take a trade here and the distance between here to here maybe gives you a good arrow, that's okay. You can exit here. But if it does not give you a good risk to reward, you can just leave it here. You can just leave it, take your profit here. Then right here, we now look for what? Our buy. Because why? We expect price to continue bullish. Are you getting me? Because this break of structure was a bullish sign. And if price would break this structure again, that will give us a confirmation for our bullish bias. That will be our bullish confirmation. But in this case, you can see that price just reacted a little bit, then came down. You can see here, you can call here what up, because many persons they'll be putting trades here, because we have seen break of it. They have seen sweep of liquidity, break of structure. Okay, that's what smart money said. You can break structure. You can take a trade here and go up. So you can see, so you can call here smart money trap. You can call here smart money trap. Are you getting me? So but after the break of structure again, so this is our new break of structure. So this is the real break of structure. So now where is the leg? This is our extreme leg. This is break of structure. So now what do you do now? You mark. Let me delete everything again so that I'll mark it together again. So what do you do now? You mark your extreme, which is your control supply. If you don't know how to mark the control supply, find your ranges, which are your demand and supply zone. You can check the previous videos. So when you mark that, surely there will be a kind of range over here that costs the break of structure, that is unmitigated. Then also, like this place can be served as smart money trap. Can be served as smart money trap because many traders will put their many traders will put why is this thing doing like this? Oh, okay, whatever. Many traders, they will take a sell from here immediately. So it can be a smart money trap. But the point I raise is that when price broke this structure, this is not a real break of structure, because this is not our market. This is just internal structure. It's not a real break of structure. This is the real break of structure. So after the break of structure, price is just retracing. So you have to understand that this is not a real break of structure, and this place now, it makes this place another smart money trap, because now many persons, they have seen this as a break of structure. They have seen this as a sweep of liquidity. So many of them will just take trades and just put a trade here, and you see how price validates. So what do you do now? But like I said, you can monitor this place for lower time frame price action, just in case price respects it, because sometimes price do respect it and gives a lower low. Are you getting me? So this is what I mean. Sometimes, many times, you just see a price do respect it and gives a lower low. Are you getting me? Maybe something like this, then you see price come back here again. You see price come back here again. Hmm? then continue falling. I get me. So so that's just it. So like I said, so price, you can wait for price to come to this place that broke structure the range, so you can take another entry here, to take another entry here. But another thing again, another tip again, if this is confusing you, this break of structure is confusing you, you can take an entry, maybe take some partials here if you are not sure it's going to break. Another thing too, you can also still wait for price action just in case price respects you and go up, all those things. So that's the flexibility. That's why we don't really I don't really look at price as lower high, lower low, lower high. You just follow the supply and demand, because you know why? Because surely there was supply here. That's the truth. There was supply here. So it means that if demand was able to break this supply, it means that this demand is also strong too. I getting me? But these are what they use to set trap. But you have to understand this. So if you can take a trade here, you are not too sure, you can take some partials here, then take some partial, monitor price action here. If the trade does not work, it breaks structure, then you know that then this is definitely a smart money trap. But so that's just how it, you just follow the supply and demand. So that will be all for today. Thank you.